How to prepare for the next stock market crash. That's what we're getting into in this video. Very serious topic, very important topic to talk about. Before that, let me just introduce myself. I'm Austin. I'm a co-owner of cloudmusicsuite.com and of course a stock market investor. Okay, thank you. Special shout out to every single person who has subscribed so far. Somewhere around 100. We broke 100 subscribers around the last time I uploaded. Means a whole lot to me. Thank you so much to everyone who has subscribed. All right, as a thank you for doing that, here's a picture of my beautiful kitty cat. Her name's Millie. She likes to stay in the room whenever I record. She is getting smarter. She is not gonna get wiped out in the next stock market crash. Okay, before we talk about any of that, I don't know when the next stock market crash is gonna be. I don't know how bad it's gonna be. Is it gonna drop 20%? Is it gonna drop 30%, 40%, 50%? I have no idea. How long is it gonna last? I have no idea. What's the first stock that's gonna fall? I have no idea. What's the thing that's gonna cause it? I don't know. The thing I do know, there's definitely gonna be another stock market crash. I have no idea when. Could be 10 years from now, could be starting tomorrow. I have no idea. That said, I wanna always be prepared. So I wanna share a few things about how to be prepared for a stock market crash in this video. The first one is it's very important to have different stock types. If I am only invested in growth stocks, like Kathy Wood with ARK Investments, I'm gonna get absolutely decimated whenever the stock market crashes, because growth stocks typically trade at a valuation premium. So when we get these huge, like 80% moves in 1 year for these growth stocks, that's not sustainable in the sense that when the stock market goes down, if the whole market goes down about 30%, which would be a huge crash, we might see some growth stocks get hit 40, 50, 60, 70, 80, 90% or more. I've seen crazier, okay? So make sure you don't have all your money just in growth stocks. It's important to have some growth stocks so that you can perform well over time. You don't want just value stocks probably, you don't want just dividend stocks probably, you don't want just turnaround stocks probably. But it's nice to have growth, it's nice to have value, it's nice to have dividend stocks, and it's nice to have a cyclical play, something like that. Let me just give a few specific examples of those. Growth might be something like SoFi, Palantir, Tesla. Big names that everyone loves to talk about, everyone loves to hear about. Value stocks, something like Coca-Cola, Costco, Target, McDonald's, okay? Great dividend payer, Lockheed Martin, Walgreens Boots Alliance, Waste Management, another great example. And then something like a turnaround play or even a cyclical play, I'm thinking Restoration Hardware, something like that, where it has big upswings, big downswings, and you can somewhat predict it with market cycles, okay? Toll Brothers, a great home builder, would be another good example of a cyclical company, Ralph Lauren, something like that. Okay, so it's important to have these different stock types. Hope those examples helped you out. And the next thing up would be to limit unprofitable companies. It's okay to have some companies that you're kind of speculating on when they haven't turned a profit yet. They're free cash flow negative, their GAAP EPS is negative on a quarterly basis and on a yearly basis. It's okay if you see the path forward to profitability to hold some of those companies, but don't put your whole portfolio in them. Don't make those your biggest holdings, okay? Biggest holdings need to be things that are already profitable, GAAP profitable, free cash flow positive, that are gonna thrive in tough times. That's the issue with those unprofitable companies. Whenever money is cheap and interest rates are very low, unprofitable companies have a decent chance of survival and growth, and they might be able to get to a great spot. Whenever debt gets more expensive, they're not turning a profit on their own. So either they're gonna have to issue more shares, which screws you over as a shareholder because now you have less of the pie of the company, or they're gonna have to take on more debt, which puts them in a worse spot, which also screws you over as a shareholder. So limit those unprofitable companies so that when times get tough, you don't get wiped out, because the market dumps unprofitable companies like nobody's business whenever it's crash time, all right? Next up here, always have cash around. Even if we go into a huge stock market crash and we get 20% down, don't deploy all your capital so that you have $0 to invest. What if we drop another 20% from there? Now you're stuck and you didn't even get to buy at the bottom. I'm not saying you should hold all your cash and wait till we have a market crash. I think you should buy consistently, but have money ready so that if we drop a little bit more, you can buy. If we drop a little bit more, you can buy. If we go down 10%, you buy. If we go down 15%, you buy even more. If we go down 25%, you buy way more, okay? So as we accelerate the decline in the next market crash, have cash around so that you can accelerate your amount of buying, because hopefully you're a long-term investor and you're trying to hold these assets for at least 1 year, if not considerably longer than that. 1 to 10 years, I would say, is a good range of how long you want to hold a stock. Some stocks is great for 1 year, some stocks is great for 10 years, and then there's a range in the middle, right? You got to have cash around to take advantage of these deals if the market crashes. Very important, okay? Quick pause before we get into the next one. If you want to see me build out a portfolio from scratch, one that I believe is very much crash proof, crash ready, I have a Patreon, okay? And I'm building a stock market portfolio with a small amount of money each week, $50 a week, just to prove that you can build a beast account over time with a small amount of money. It's a no-brainer. Go ahead over there, link in the description and in the pinned comment. Thank you so much. Back to it. Last one is to never own a stock that you do not understand and you don't have a reason as to why you bought it. If you just bought a stock on a whim, that is always going to be the stock that you want to sell out of whenever it starts to go down, because you don't understand it. You have no idea why you bought it at $130. So when it drops to $100, you don't think, okay, now I have a better opportunity, let me load the boat. Rather, you think, oh my God, what's going on? This company's going to zero, sell it. Maybe you were wrong. Maybe you were super wrong, and 6 months from then, the stock's gonna be at $200 and you could have made a $70 per share gain. But because you had no idea what the company did, you didn't have any confidence, any real confidence that the stock is gonna move back up. Stocks don't move back up for no reason. Stocks move back up because fundamentals improve. And the stock market respects when fundamentals improve. So if you have no reason to buy the stock from a fundamental standpoint, you don't have no idea if the stock is a better buy whenever it goes down. All right, so those are just some thoughts there. I think if you just do those few things, you will be very much prepared for the next stock market crash. Like I said, I have no idea when that market crash is gonna be. I don't know how long it's gonna be. No one knows how long it's gonna be. Warren Buffett doesn't know how long it's gonna be, and they don't know when it's gonna happen. So prepare yourself, be ready no matter what happens, and go out there and make some gains. Thank you so much. If you made it this far, go ahead and subscribe, like the video if you like the video, and I appreciate you.